be sharing with you tonight before we start is, how did I crossroads with fintech in the first place? Like Chiedozie said earlier, I've worked with so many of the banks, and I had the really exciting opportunity to lead and start up innovation at one of the big banks. And I'll try not to call names tonight because, I've been told not to call too many names. Yeah. We went through. We in that team. What we managed to do was to create an innovation process which was geared towards closing whatever gaps that we had in our technology, in our strategy, in delivering our strategy, looking at technology that's outside the bank, not inside. And we did a lot of work with so many startups. We are part of their incubator, the bank's incubator. One thing that came out quickly was the frustration between us who were in the big banks and us who were trying to get things in the big banks, and the startups trying to move things. They were able to move things quicker, but we weren't. And that was a big concern. And you just start asking yourself, how are we? We're spending all this money trying to go through innovation. We finish that process, things get put on the shelf. And what's next? You don't see anything about it until maybe 2 or 3 years down the line. You see something that is that you worked on being done by somebody else, as if it's a brand new thing. But no, we worked on this thing 4 or 5 years ago. And you just think, why should we keep doing this? And that's what really pushed me into this zone where we had different type of people who had a level of boldness to deliver things that are totally and completely different. And they were flexible, agile in delivery, and able to get things going in terms of looking at what the organization wants and quickly coming up with solutions and solving problems quickly. So that's my short story. In terms of fintechs, there's a lot of confusion around, what's financial services, what's fintech, and so on. And I just thought I should put in this. But what you find is that the people we call fintechs are not the only people who are using technology to solve business problems. The banks are doing that as well. But the difference is in the approach, in the way that technology is deployed and the speed of deployment of this technology, and also in looking at the way that they attack business models. And this is something that I'm going to come to later on in this presentation. So foundations, in terms of foundations, and that's why I talked about the banks and so on earlier. In the 1800s, there's a lot of international trade that needed to be carried out, and you started seeing things like the telegrams. I don't know anybody here who was part of that era where you had to wait for telegrams, and so yeah, to get things going. And I remember that went well, and I think that got followed up by fax machines. Yeah. You had to wait, and you had to tell someone when you're going to do that, send that document, and you wait, and then it comes at that time. And then, early 1950s, we started seeing, the mainframes, the likes of IBM cracking into that, and also the credit cards, ability to just walk down the street, go to the machine, and pull out money. And that followed up between 67 and 68. And then the mainframe computers, which enabled speed in banking, to enable banks to start processing the amount of transactions that they need to process for their customers. But that has continued to improve up to this date. But then, there's a lot of competition in cloud computing and so on, which is what's given the fintech organizations the leverage that they have over the main banks. And that's the baggage that most of the big banks carry in terms of trying to move over to something that's cheaper. They're not cheap. I gather it's about 4,500% more expensive to run those when you compare to cloud technology. And then, 2008, the financial crisis happened. And, that's totally changed things. There was need for a brand new view, coupled with the improvements in technology. We started to see digitization of banking. But what happened at the start was us trying to implement the normal banking processes into using technology to implement the normal banking process. It didn't follow the first principle approach, which is looking at the problem and rethinking of how we can solve this problem. And it then accelerated when COVID happened. You find so many people who wouldn't touch any of these apps looking at security because it's money. In this space is money. So two things, there is speed, there is convenience, there is also security. You want that convenience and you want security. Most people wouldn't touch it. But then with COVID, everybody became conscious of, I really don't want to go and sit in a banking hall and talk to people. Maybe I'll get a disease or something like that. And that's really, and at some stage, people were banned from going out. So at some stage, that was the only way. And suddenly people were able to look at these things and think, oh, this is possible. So I don't have to take a day off in order to have an appointment at the bank, in order to do some banking transactions. And also, loads of numbers of people, smartphones became very, very, very affordable. And you look around the UK, for example, there are loads of charities who are able to supply these to people. So financial inclusion didn't have any barrier there. And that's where we are. So in terms of where we are today, like I said earlier, digital banking, so replication of what's happening in the normal day-to-day physical banking to having all those functionalities transferred to our phones, and we're able to use it, ability to go out there, bring a brand new idea, push it out, and get that pitched to to whoever is interested. For them to invest in that. And then payments. There has been a lot of changes. So the basic payments that would happen normally, but then when you think about things like embedded finance, that's a really big game changer in that space, because now people who are not necessarily, in banking are able to incorporate payments into their systems, the taxi people. One of the things that we worked on actually in one of the banks was looking at automating the process of payment. So when you hire a car, for example, you get to the airport and you have to queue to get the key and things like that. Changing the way that happened. So that we are now able to use biometrics to get into the car, or you use your phone in an app and you can unlock the car and start to go in there. Payments are taken, no contact with anybody. That's really huge. Personal finance as well. There's a lot of that now. I was talking to one of the gentlemen that I met here earlier, and he was showing me something similar to this, robo-advisors, where we are no longer relying on human beings, the analysts who will go in there and crunch the data and begin to give you recommendations on what they believe is the right investment. We have powered robo-advisors who can skim through a lot of data and pull out and identify certain trends in order to inform the customers or whoever is in charge of what the best way to go is. It's InsurTech, we're now able to insure ourselves, insure cars, to drive cars within an hour, within 2 hours. That's available now. You're no longer being burdened by, you need to wait for days, it's got to be 1 year and so on and so forth. And what's happening there is because now we have AI-powered systems that's able to do risk analysis and get the company to the stage where they're able to make a decision to give you that insurance based on the parameters that's there. And then we'll take, portfolio management. That has become a really, really big thing. How do we do it? It's of course it's quite expensive, but if you have robots doing that, if you have financial technology enhanced processes to do that, what happens is you're surer, you'll be able to estimate, you'll be able to guess what direction the portfolio is going, and portfolio rebalancing as well, based on actual data, rather than just maybe research. Of course, when it's humans researching, there are limits, but with the AI systems, they're able to go through loads of data in order to get things done. And then we come to the cryptocurrencies. Something happened, when this came on board, 2008 with Bitcoin and so on. Going on from there, what happened was everything about crypto, everything about blockchain technology was now cryptocurrencies, and everybody was cryptocurrency. What can I do? What can I do with it? Forgetting that there's a more interesting technology that's behind it, trying to put in effort to understand that, because of the back of that, we got cryptocurrencies. We also got smart contracts. We also got the DeFi, DeFi as well, which allows us to have things in stable coins and be able to take loans, and that is growing at a very, very rapid speed. Right. So, in terms of innovation, I've talked about artificial intelligence and what's happening in that space. There's a lot of focus on all this, and I had a lot more on this lecture, but I'll just go through what's here. In terms of artificial intelligence, we are seeing that massive focus on that, especially when it comes to customer service. Most banks are using that to power customer service, to ensure that straightforward queries are being answered. Obviously, there is also the use of it in the internal processes of these different organizations, so that it's no longer manual. There's efficiencies in the system. As you can imagine, most of the big organizations are, even as a result of AI capabilities, reducing their workforce, which is what the future is. And there isn't much that we can do about that. Obviously, there's the bias, there's the privacy issues and so on that's there. But what these do is to provide us with some more opportunities for us to then go in there, bring solutions that solve these problems, so that we are able to gain a lot from the technology. Again, focusing on the technology. But I'll just go through all these innovations, and then in the next slide, I will talk about something that really brings this home. I had a funny title to this presentation, which was rejected straight away. So I will not talk about it. So we're just going through what's going on in innovation. I mean, there's blockchain base, which is actually the space that CheckrPay operates in, using blockchain for digital identity and then incorporating payment in that process, and decentralized finance. There's general fear of that restriction that comes in. I'm holding a pound sterling, I'm holding that currency, but there's loads of stable coins which and organizations that offer these services and allow you to have, be able to take loans, to be able to use your cryptocurrency as collateral for loans and all sorts of borrowing. And then there's the Internet of Things as well, which is something that is being pioneered by people you wouldn't even expect. I mean, I was reading something about Caterpillar the other time, and they were building something into those new trucks. And what that does is all the parts will have the age, the run time. If you use them for those number of times, it automatically emails Caterpillar to send those parts, so that you as a customer, a user of the system, is going to gain the efficiency by having that process automated and not waiting until you have a breakdown and then suddenly something happens and so on. And that's, everybody has heard about the one for the refrigerators that, installed in refrigerators where you have sensors, and when you run out of milk, it gets milk ordered automatically. The next thing you find that in front of your house. But these are financial services. These are opportunities for financial services, and it doesn't just end there. I was looking at one of the startups in my role as judge with FS on the FS Tech judging committee, and there's a lot of work that's going on in RegTech. There are now very, very clever algorithms that's built to monitor conversations in organizations. So obviously, financial services organizations are highly regulated, and what that means is if you get things wrong around the regulation, there is a massive, massive fine. So systems are being built now to automatically track conversations, to look at deals that are being set up by organizations, by banks and financial organizations, to ensure that they are above board. And they will call out whatever is not there, aligned with certain regulations that's been put in place to manage those. So it's no longer manually. It's no longer manually done, where you have to, kick off a project and then go to someone in regulation department or in legal department to go through number 1, item 2, item 3, item 4. No. This is now automated, so that in your conversations, in all the deals that you're doing, you're getting real-time checks on those documents to ensure that they are above board. And I will talk about quantum computing just a little bit. So this is a technology where there is a lot of competition that's going on now, simply because there's a lot of opportunities that it presents, especially around organizing very complex data and solving very complex problems. And there's also a space for quantum ready or quantum protected type of systems, where, because the general understanding is, because it takes quantum computers a lot less time, what would take a normal computer 10 years to do, it would take quantum computer at its peak, because it's increasing. I think atom computing is at the peak now. They're on, I think, 1,180 something qubits, and IBM is pursuing them very fast. And it's quite fascinating that atom computing only started in 2018. And they are competing, they are better than IBM in working on that technology. So that's something. I'll just put that in because I know that people who are interested in fintech are people who are bold, who can challenge the status quo and say, this is possible. Because one of the things I've done doing this type of fintech innovation is going into organizations. There are certain projects that you would never launch if you didn't have 3-4 million approved, but would go in and say, okay, that's fine. We have a process. Why don't you just say, we're looking at 5 projects, but we allocate about £250,000 for each of those. And we're able to go out and give the very, very ambitious but hungry startups 50,000, 100,000 to engage them to come in and work on these ideas with us, because they wanted that collaboration with the big banks, and off the back of those collaborations, we're able to invest in them while they grow and attract other bigger banks, because reputation is everything when it comes to fintech, to fintech innovation and fintech diffusion. That is how it spreads into other organizations. All right, this is just to touch a few, but let me go to the next screen. Is that where it stops working? Then we are used to this. Oh, fantastic. All right. So when we talk about the future of fintech, what most people think about is, oh, what's the next technology? Oh, what's going to happen next? Where are we going next? And that's why I have that strategy and business model as one there. And one of the things I talked about is, using the analogy of a child that goes into a sweet shop. You take a child into a sweet shop, they don't know what to choose. There's just a lot of buzz around these technologies, but it's not about the technologies. It's about solving specific customer problems. Different banks are set up to do different things. You know your customers more than anybody else. And I'm thinking, why don't we, how about a future where instead of thinking whether it's AI, whether it's blockchain, whether it's quantum computing and all the rest of them, why don't we just always start by creating a strategy that is coming off the business, that will then inform the business model, but strategy that is around what do you want to give to your customers? What do you think your customers need? What are they saying to you? And then you use it as a toolbox where you say, they say they need to talk to us quicker. All right. Maybe it's a case of using AI to support our customer service so that we can improve customer experience. Instead of going about it the other way, you go to a conference and the conference is all about AI and you just call Frank, listen, come to my office. We need to discuss something. It's really important. This AI, how can we get this thing done? And at some stage, it becomes a badge of honor for organizations, which becomes a total waste of money because you're starting from where you should actually not start from. And that's why I believe that this is an important driver for the future of fintech. So for different organizations, you have your business model that is based on what value you want to deliver to your customers, but that's has got to be, be specific to your organization. And sometimes there are new technologies as well that come out. Some of them might be very effective, but when you run organizations, there's the element of cost as well that has to be put into consideration. Sometimes the cost is very inhibiting, even though it's the most efficient way of doing it, you then have to make that decision. Else, you find organizations deploying their budget in things that do not really deliver a lot of value to their customers, and that becomes a problem. Right. In terms of regulation, thankfully we have FCA. They are very kind. They have their sandbox. There's a lot of opportunities to learn there. What's happening is technology is moving at a very highly accelerated rate. And because it's money and it involves security and convenience, but security of that money is of optimal importance to the customers. That's very, very important. That's why the FCA needs to be made aware. That opportunity to go in there, register for something and work with them. They learn. And the fintech operators learn as well, get the view of how the regulators would approach regulating those. But you can't regulate without understanding whatever it is that's the proposition. And that's something that I got from the implementation of the Alternative Investment Funds Directive when I was at the FCA. We needed to work with a lot of investment managers to say, this is what the regulation says, and this is how we are going to systematize it. What do you think? So that we, reading the regulation, there are just it will look very straightforward to then say, if the regulation says you have to report every 6 months, then you report every 6 months. These are the things that we need to see. But sometimes when you talk to these operators in that, when we spoke to those operators in that area, we found that there are some difficulties there, and we managed to come to a consensus, which means that we're not just putting in a regulation that is there that we cannot enforce, that is impossible for organizations to follow. And that's why I believe that that's really, really important, because you don't have any need of starting and then you get stopped by FCA because they don't know this guy is moving too fast. You need to stop, or you get a fine because they don't understand, not because you've broken any law, but because they don't understand what you're talking about. All right. So in this future, there is competition. I put this one in here because There's a lot of, you see the Googles, they are coming in into the fintech space. Facebook is in, you had the announcement from Twitter the other day. But what I find really, really interesting there is that also presents opportunity, because those large organizations, they do not have that capacity to really, really understand a particular group of customers. For example, if you're working with payments in agriculture, or you're working with payments in education, you will have a better understanding of those industries than Google will understand it and be able to, even if Google understands because of the data they have, some organizations would prefer to deal with someone who knows that industry. And that's where the opportunity is. And the other opportunity I see there is that as we go into the future, obviously there's a lot of money involved in innovation. There's a lot of money involved in experimentation. And because that is the case, then it lies nicely in the hands of the big tech. Let them do it, do the experimentation, and then just with the use of an API, you can get that service at a monthly charge. And that's where I believe that the opportunity is there. The next one is collaboration. This a terminology I put in there, competition. This is when collaboration happens between known competitors. And I put that in there because in 2017, we had a lot of collaboration with some, we were working for a big bank, but then we were sort of standalone, like a rogue team that was allowed to go out there and speak to these fintech banks. And what we got from there was a lot of learning. We got to a stage where we were able to set up what their proposition for the banks. Well, the gap there was because they didn't understand how banks work. We were able to then help them to attend meetings and speak to banking executives to get them adopted by those banks. So irrespective of the fact that we were banks, we were benefiting from that collaboration because we were learning. That was a product that we really needed to enable our customers to get their receipts. So instead of having receipts printed out, and obviously there's a lot of focus on sustainability now, as we all know. Instead of having the receipts printed out, we had the receipts delivered to your banking app, inside your banking app. And that was what we helped them to do. But then beyond that, beyond the learning, beyond the capabilities that they were able to bring into the bank, where they were able to then get our help, get some skills from us to have those big conversations and create processes for navigating the big banks. Because there's a lot of departments there. Before you kick off anything, you've got to go through them and endure that very, 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 very tiring process. And that was what that's exactly why I put in that, because it's very easy to say, oh, we're doing the same thing, let's not talk. No, we need to talk to each other in this industry so that we can share ideas. The other thing that comes out of collaboration is most organizations cannot hire the type of professionals that are in different organizations. Let's say you have an expert data analyst in one of the collaborating organizations, and then you have an expert software developer in the other organization. That's an opportunity for them to work together. And what you're gaining is the knowledge of those professionals that you can't even afford to hire from other organizations, added to whatever you have inside, and then you can create something that's magical out of that. The next one is incubation. This is an area that I'm really, really interested in. I'm actually pushing myself to work on a paper on this as part of my research. Corporate entrepreneurship. Most individuals who work for organizations, they are born entrepreneurs. They want to do something different. They want to create something new. But for most organizations, they don't have that process to do what they call idea farming. And if you've worked in so many organizations, there will be that at some point, there will be a push to say, oh, if you have ideas, the suggestion boxes and so on and so forth. But there isn't that actual structure around how we tap into these ideas, how we use them to produce results for the organization. And this is a very, very effective strategy when it comes to fintech organizations. And the people I've met working in fintechs are people who are very bold. They want to do things. They want to break things. They want to do things that are not normal. And if you create an organization and think, oh, this is the best solution that we have in place, and nobody can challenge this, you are just shortchanging that organization. But if you create an organization where there is massive support for corporate entrepreneurship, what happens is you have a very rich pipeline of functionalities or services or products that's coming, not based on your own ideas or the senior management ideas, but from people who are keen or who are probably talking to customers. And so they know more, they're able to create something that's quite effective for the customers. Right. The next one is leadership. What happens in standard organizations is, you spend 5 years, that person has spent 10 years, so they become the leader. The problem with leading when it comes to the future of fintech is the rate of change of technology is very, very fast. The type of people who commit themselves to work for small organizations and even the bigger fintechs are people who are different. So if you're leading people who are different, then you have to get those skills to lead people who are different. Because if you use the standard leadership style, I had a very funny encounter. One of the guys who reported into me during COVID, sent an SOS to me to say he's struggling during COVID because now everybody was working from home. He was used to waiting for people to come in and they sit at their desk and then they leave at 5 and yes, they've done the job. He wasn't used to managing people who were, offshore, sitting at home and so on, and creating something that enables him to lead those people effectively to still produce results for organizations. And that's where you see that disparity between outcomes for some organizations that have properly trained leaders who are able to lead a certain type of people and other organizations who just adopt, his leader. And for leadership, that's the other thing. If we find ourselves in leadership, or if we want to lead in fintech, which I believe that anybody who has interest in fintech has got to have that interest to lead, because what we're doing is something that's totally different. It's challenging the status quo. It's not something that everybody is doing or believes. We then have to have that skill upgrade in leadership. Continue studying because people are changing because of technology. There's a lot of younger people who are coming into the workforce. I read something from a report from McKinsey, which was talking about the focus on sustainability and value for the Gen Z workers. They just don't want to work for an organization because it pays them X amount of money. They want to work for organizations that are doing something either to preserve the earth or something that has an impact on the world, the type of impact that they want themselves. So that nicely leads me to social impact. There's a lot of focus on investments in that area in fintech now because, global warming, all those things are happening now. Even customers, not just the people working for the organization, but customers are now more interested in, finding out if you're doing something that you cannot do sustainably. They're looking at how much, how are you offsetting your carbon emissions and things like that. And that is a decision point, not just for your customers, but also for your investors. And this is really, really crucial if you have to raise funds, which is something that's really a huge part of the fintech life. Right. So for the future of fintech, I'll end with this expansion. So you see, with what's happening now, there is a lot of focus on producing things, creating things that individuals, B2C, customers can use. but there isn't a lot of focus on creating things that SMEs will use, other businesses, big corporates, and so on. And that I believe is where the largest opportunities lies, because the large corporates, they have money, but they have problems with their operations. They have problems with their processes. They have problems with their architecture, the way that they're set up. They have problems with getting things done as quickly as fintechs will be able to do it. Those are opportunities where I believe that fintech organizations should pay more attention to, because that's where the money is. And then government. I was talking to one of my colleagues last time, and we're saying, the job adverts, you see, they will tell you, oh, you have to have 20 years experience working for the government. You have to, and then you think, go and do any poll of anybody who has any dealing with any part of the government, local governments especially, and they will tell you how difficult it is to get things done. You be on the phone, you spend 30 minutes, nothing gets done. Sometimes they don't pick up the bean. Sometimes the benefits are not, coming through the way that they're supposed to. And then obviously globalization. There is a lot of opportunity for us to build things, just like the Googles, the big tech guys have built. But there are opportunities for us to build things that can be used by people. It doesn't have to be. A massive thing, but it's got to start from somewhere, from a small idea, and then we start pushing it out to the rest of the world, so that it becomes something that's global. And my firm belief is that we are. If we can move to the next, I don't know. I think this is tired. My firm belief is that we are. We are dreamers. We are dreamers. We challenge whatever it is that's there, and based on that, there are no boundaries. Nothing is stopping us, and commitment to continuous experimentation, pushing boundaries, and failing happily. Because that's how the large organizations that are winning, that's how they are winning. They are winning by pushing boundaries and doing those experiments and failing. I mean, you need to go and look at the amount of money that these, IBM, Google, and so on, they are putting into quantum computing. You need to go and look at that amount, and you see, one day, they know that one day they're going to win, and that's going to make shed loads of money for them. And that's where I would like to stop. Thank you so much for listening.
Thank you for that wonderful presentation, Chiedozie. I think I'll open now the floor for questions. Those of you online, please enter your questions into the Zoom Q&A chat function, and Chiedozie will be able to answer it. But the in-person guests, please feel free to ask your questions.
Yeah. That's my learning session now. Go, ladies first.
So I have actually a comment on one of the things that you said, that businesses need to approach the technology from the strategy side rather than the technology side.
Yeah.
I can argue that sometimes when we learn about the technology, we can actually understand what kind of problems are solvable.
Yeah.
And so I think it is okay or good to approach, I can say, IT experts, technology experts, to learn about the technology and then understand what is possible. And then the business can figure out, okay, what kind of problems we can solve. And maybe we cannot see the problem unless we know technology. And so I think it is both sides,
Yeah, no. Good thing to call out there. So what I didn't say in the course of this presentation is that we need to begin to build organizations that have what they call a dynamic capability that allows you to get those skills. You are gaining those skills. You have that capability in your organization because that capability is strongly focused on the changing technology. You have that. And I talked about a shelf. Where you have your toolbox, you understand what is there. So you do that first, or you continue to do that. You have one hand in exploitation and you have one hand in exploration of those opportunities. You're exploiting, you're exploiting the opportunities that you understand. but you are exploring on the opportunities that you don't yet understand. You can't say, oh, I'm just going to do exploitation because that's what I understand. You've got to start from ensuring that you understand technology, because it's only what you understand that you can then go back and refer to and say, this actually solves this problem. But what most organizations do, in my experience, is they get caught up in the buzz. There is a lot of focus on this. And then someone says, oh, I need this technology in the organization, just make it happen. Because when we go to those conferences and want to stand up and say, oh, we were the first people to do this, blah, 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 blah. So you have a good point there. It's a case of organizations understanding their, what they call ambidexterity, exploitation and exploration. You have to have that happening at the same time, but don't let exploitation then guide your, exploration guide your strategy. You're exploring, you have a group of people who are continuously learning, trying to understand what is this thing, what can it do, and what does this mean for our organization? Once that is understood, you can then put it in the organization and say, this one is in our shelf. In case somebody wants some solution that does this, then this is what we can use. Does it make sense?
Yeah, absolutely.
Yeah. Thank you.
Yes. My question is about AI and its challenges bring to fintech. We know that at the moment, when we use AI to, let's say, solve problems or something, the AI is not obliged to explain how it comes to the solution. And you mentioned about fintech is about keeping money and all those things safe. Do you think it's going to AI is going to pose challenge in this front, especially on how you use AI to drive innovation, as well as how do you make sure the solution you come up with is sound to the regulators?
Yeah, no, absolutely. Very, very good question. The problem with AI is, it's not a problem. The challenge with AI is at this stage, there are still some issues. Things like transparency. How did you come about that? Where did you pull your data from? Things like hallucination, where it just gives you some crazy answers to questions because it really can't be bothered to find the information that you're looking for. In this presentation, those are opportunities that we can explore. There is still a lot of research that's going on in that area to ensure that, because when you come up with a solution and you want to apply that solution to a regulated environment, there's got to be a form of transparency, because the regulators will want to know, how is this thing happening? You don't just go in there and say, oh, this very complicated mathematics happens, and then that's the solution. You've got to be able to explain it, have some solid empirical evidence that says, this is the process of getting this, because this is people's money in most cases, and you have to get that done. But that's a concern. There's also privacy there. There is also things like intellectual property use and so on. Does it know what to use when it's producing, when it's responding to your prompt, and what not to use? Because it could use something that is licensed intellectual property, then gets you into trouble without you knowing it. How do we solve those problems? So these are the issues, and that's an opportunity as well. That's an opportunity to fine-tune things, create another level of confirmation of results from prompts and so on, that then does a little bit, maybe in some cases you escalate that to an individual to look at it, to make sure it's right before it goes out there. There are two hands. I'll just take this.
Hi there. I've got a couple of online questions.
Okay.
Ian, he says the fintech space is now quite mature.
Yeah.
What's the next area of competition or disruption? Can you please predict?
Okay. So next area of competition. So if you look at the landscape carefully, what you find based on what's happening is there is a merging that's happening between financial services and whatever, because even the traditional banks are opening up their fintech counterparts. And we know And we know why that's happening, because they're trying to fight and find a solution to the legacy systems that they carry and all those baggages and so on, prepare themselves for cost savings, because running mainframes are extremely expensive, and the skills, the money for licenses and so on, they're all there. So what I'm finding is what I don't want to say I'm predicting, is that there's going to be a merger, because you see the big techs as well coming into that space. And they have the learnings, because most of the even the fintech banks now are using either AWS or Google Cloud and IBM Cloud and so on and so forth. What that's doing is making data available to the people that might compete in the future. You have Twitter coming as well. They have access to data that will allow them. So what I will predict, actually, let me just say that, what I will predict is that there's going to be, the boundary between fintech and traditional banking is going to continue to be eroded. And we get to a place where that boundary maybe disappears, and big techs as well occupies that space. It's now a case of we must be forced to collaborate. What are our areas of strength? Can we bring that to the board? If you have a really good AI model that allows me to do prediction, can I just API that into my organization and use that to cater to my customers while you run the big things? Specialization in different areas will continue to happen. And what will happen is some banks might merge, and then some will quit certain areas of certain aspects of banking, because it's not profitable, because it's all about being effective and profitable as well.
I have another difficult one if you don't want to.
Yeah, let's get it easier.
There's a great presentation, by the way. So my question is around the regulation and risk, basically.
Yeah.
Trying to draw some from some of the questions have already been asked and from the main presentation.
Yeah.
It's about the big tech companies, the Amazons of.
Yeah.
I've been noticing that. I think I read in the Financial Times recently that Amazon, I think they invested about $4 billion in a startup, AI startup, I think, Anthropic or something.
Yeah.
And then had, I think, Microsoft as well, about 650 million in another one.
Yes.
And there was one article about the CMA here in the UK wanting to investigate and everything.
Yeah.
So, Bob, I got thinking, I was like, how is that really going to work? Because obviously, from a profit point of view, like you mentioned, these guys, they want to get in early. They are looking at what's going to happen in the end.
Yeah.
They just want to just get in and and ensure that they get a big slice of the cake. But the guys who are doing the regulation, the regulatory parts, how technical are they? Are they how well positioned are they? In terms of, let's see what's going on. What are these people investing in? What's their plan?
Yeah.
How is it going to affect the end user? What's the risk involved? Do you think that likes of CMA and obviously the FCA where you worked, do you think that they have that? Because it's a case of I need to know what you do to make sense before I actually regulate or check. So if they don't have, do you think they're well equipped now, or you think the big boys are going to more or less have an easy ride because they're probably going to say, what, money's coming in, AI is the future. Let's just paper over the cracks and let them go ahead.
Yeah. So really, really interesting question there. So the big techs that you're talking about, they're taking advantage of a lot of things. And I'll just tell you a little story. One of the places that I've done innovation, what we're doing, and now, these are things that's happening and it's properly legal. Yeah. So one of the places I worked in, what we were doing was we're identifying the startups who we believe could bring value to our bank. And we then screened the founder to make sure that they have the willingness, the team, make sure that they have the capability to deliver what they're promising to deliver. and we'll make a small investment in those small organizations. Meanwhile, big banks, we have the lawyers, we have big PR, Financial Times, we have our very good customers. So it's not something for the public to know that we've invested in that startup. Start working with them. First announcement, so and so is collaborating with so and so. What does that do? The other bank says, what have they seen in this startup? Let's go and check them out. Let's have a meeting and see what happens. And then they turn up. Someone from the other bank comes along to just give testimonial that they are doing well. And the next thing, there are 4 other banks queuing, to get on board. Guess what that does to the value? Up. You get the next bank, we have our PR machine, they've already been paid. As soon as another bank comes in, boom, we put it out in the press. It just has that domino effect and gets the orders. So some of these things are happening. The ones you're hearing may not even be their first investment. That's what they're really, really good at. And in terms of capability on the regulator side, I believe that's where the sandbox facility comes in. And that's also where your ability to explain, they're building capacity in those organizations, because you can't say no to something you don't understand. But then the ability of the startup to then be able to explain and say, this is what we're doing in simple terms. Because how it works is if we don't understand what you're doing, or if we think we understand what you're doing and you can't show us how you're doing what you're doing, it's a no. Yeah. So your ability to go in there and explain clearly and say, this is what's happening, this is how we're doing it, and make them understand it. Even if they have a professional in your area there as well, you still need to do that, because it's not just going to be them in that panel. There are going to be other people who are going to hear that and say, can you tell me that again? Can we meet again so that we can dig deeper and so on? Until you get there, they will not have. But in terms of having that capability, that's being built. And what the big tech organizations are doing now is to take advantage. I mean, you saw what happened with the cryptocurrencies. There were a lot of participants in that market. So many people became very rich before massive regulations came in and took advantage of and took out so many of them. And now, the millionaires are in the islands enjoying the money, while the ones who are coming in now are, bearing the brunt of having to pay to go through that process.
But that's nothing new, is it? Because that's exactly how Amazon succeeded. Because Amazon was not profitable for decades.
Yeah.
They were spending millions. So where was that money coming from? Coming from secret investors.
Yes.
That were putting money in, and they knew that every time a new investor came in, it diluted the risk for the other ones.
Yes.
So they were allowing them in. So this was all not that. There's no information on it.
Yeah.
You think, well, how could Amazon be unprofitable for so many years before?
And
but
survive.
they've now recouped many fold. So this is just making money.
Yeah.
Because
That's
the
it,
idea
nothing
was
more
good,
than-
because Amazon could do it, because the idea was good and people could see that was going to be the future.
Yeah.
And for every big investor that came in and put another $1 billion in, it diluted the risk for the ones that had already done it.
There.
So that it goes back to the competition, really.
Yeah.
So not shutting them out, but going, let's spread the risk in it, these guys. This is not a bad idea.
Yeah.
So it's like the first one in is the important one, and then all the others lead in. But it's all done under the waterline.
Yes.
We don't know who those people are today. We don't know who actually bankrolled Bezos for all those years. Somebody did.
Yeah. There's a lot of that happening. I'm not going to say that that's an opportunity, but if you can get there, across the line, start making money before the focus comes on you, then, make the money, as long as you're being ethical, obviously not duping people their money, but in every area, there's going to be regulation coming to it. Go ahead.
Hi, I've got 2 questions from D.
Okay.
This goes back to the money thing. It says, how much does it typically cost to start a fintech company? That's tough. And the next one is, how do you mitigate security concerns on financial platforms and ensure business continuity? They're not quite related to each other.
All right, so I will answer the second one, and then you tell me the first one again. All right, let me just answer the first one. So how much does it cost?
Millions. Millions.
Listen, starting a fintech is about being very resourceful. It doesn't have to cost you millions, a lot of money, all that type. If you have a skill that you can use to create something, in most cases, it's best to create something that someone can see and you can demo it to someone, then that's created. If you create something that has the ability to solve a problem that somebody else has, and you can justify the scale, the number of people that can come in there and use that service and be able to create more value for the investors, then you've started. Once that's gone, you go through your demos, you can raise any amount of money. We're talking about starting it up there. If you ask me, it's £20. What is it again? For Companies House? That's it, it's £20, you register your company, you start working, being resourceful. You know, you can ask friends, you can ask colleagues, former colleagues. I've done that in the past to say, look at this thing for me, what do you think about it? And they'll say, oh, I'll look at it during the weekend. And they'll just do it for you for free. These things, it's about resourcefulness. That's the key word there. It doesn't have to cost money. The other thing that most people have done is to go in, quickly use a deck like this one to raise shed loads of money, but you don't know what to do with the money. It's always good to just use your resourcefulness to create something, an actual product, no matter how small, MVP they call it, put it out there, demo it to people, demonstrate the ability to provide value to whoever is going to use it, and you are on the road. The other one is on how do you ensure that there is security on financial platforms and so on. I think the good answer to that is to avoid CrowdStrike. Yeah.
Late.
That's too late now. Yeah. So maybe that's a good one. But there's a lot. You know, with my work with FS Tech, the things that you see, the work that a lot of our colleagues are doing in the cybersecurity space is very, very impressive. There's a lot of AI deployment in the cybersecurity space now, so that instead of just using ordinary monitoring solutions, they're using properly AI-powered monitoring solutions, which do a better job than the usual one would do. They look at trends, they are proactive in responding to situations that looks like it's an attack, things like that. What else? And having a proper strategy as well. Having a proper cybersecurity strategy is very, very, very important so that you build from the scratch. You understand what are, if you're financial services organizations, there are, the ISO 27001, there is the PCI DSS things and so on. Make sure that all those certifications, you get them. Because what it does for the organization is it not only ensures that the right people are there, the right technology are there, but it ensures that the right people are there and the right processes are in place to use those technologies. And then when you add the AI-powered cybersecurity systems, then...
I mean, from my own point of view,
Yeah.
we had a presentation here some time ago now,
Yeah.
some years ago, and he was a guy from the FCA
Yeah.
who would provided a resource to startup companies or any company running an IT project.
Yeah.
And he would go in and help them.
Yeah.
And of course, you've got the FCA sandbox. So
Yeah.
they'll provide you, if it's not going to work in the sandbox, it's not going to work outside of the
Yes,
sandbox.
yes.
Is there a cost to using the FCA sandbox? I think that there is.
I think there's an approval process.
Yeah.
And there's a little cost, I think. I don't know how much it costs.
The startup costs, yeah.
Yeah, I don't know how much it costs. What I'm building currently is not for the UK. It's for Uganda. So I'm getting into their sandbox at this point, and there's a cost to it to go in so that you work with regulators and so on. get that going. And then once that works there, then we can think about globalization, hopefully. You know, you've got to think and dream and have those big dreams, you know.
Nigeria.
Yeah, absolutely. Yeah, nobody will invest in those. Everybody's looking at return on investment. And when you think of, you know, dollar and everything, it just doesn't make sense. That was my first thought, but killed it once I spoke to someone.
I think we're going to be taking a couple of questions now, about 2 questions, you know, because our it's getting cold.
Okay. Okay. All right.
I have a short question, hopefully.
Yeah.
Do you have any recommendation for somebody who's just getting interested in the sphere, maybe a newsletter or podcast, something to read, to listen to? Financial Times, I guess.
Yeah.
Anything else?
Yeah. I think 11FS. It's a very good one. They have a really nice podcast, financial fintech type of podcast, and I like their view of how fintech is going. And they also help organizations, so they have a lot of case studies. Because I wouldn't recommend an organization that's not put, you know, really actively working in that space, doing things and failing or winning, and that sort of thing. So 11FS is a good one, and that will then lead you to other similar ones if you go to the Apple podcast space. Yeah, thank you. Any more? Oh.
I think one of the things that you see about fintechs is how they evolve. And you raised the point that, you know, when a lot of people attach themselves to some of the legacy banks to begin with, and of course the legacy banks didn't know how to deal with it in a way. And you had this innovative resource and this solid machine that there was no cultural fit for it. And a lot of those fintechs died because the ideas might have been absorbed, but the actual product was never put to market. NatWest was a case in point with Bob. And I'm just thinking, what we're seeing now is an awful lot of mergers. We're seeing fintechs failing because the original idea had not been thought about as a profitable venture. They had profitability. Sustainability is the key to actually being in the marketplace at all. But what we're seeing there, so some are failing. We're also seeing a lot of consolidation. And you're seeing consolidation companies existing to buy into fintech. So they're actually creating a holding company and buying little bits of edible technology and trying to build basically a platform. When you think about Starling now, they've actually gone to the stage where they're actually selling their platform.
Engine.
Yeah, they're
Engine.
So you know, having built all the blocks, they're now saying, okay, we can sell this on as a technology company. And that's really what's happening in all businesses. We've gone from banking being a business in its own right, which use technology as a solution, to financial services becoming a technology-driven industry. And the banking bit has become tiny. So sort of in knowledge of why credit risk is important and things like that has gone by the way, really. Because now I can use my AI to decide my default rates and things like that. So you've got to think about, is that now transferable to other industry? You mentioned about government and health. I know that in here at BCS, we've had speakers who are using all the same fintech principles to evaluate diagnostics in we know you were talking about Uganda, great place to push out that sort of technology for health purposes as well. So the industry is evolving, but it's in a very predictable way, in a way, because this is what happens with all fragmentation. You get fragmentation, and then you get consolidation.
And that's where experience comes in. And if you look at the other trend that's on now, is that most of the fintechs are now employing people from the big banks to lead traditional banks to lead them, lead those organizations. You look at Monzo and so on, because the pressure was too much and they couldn't. And then you look at Starling doing a great job. The lady that started Starling was from a traditional bank. You see, and she did a Starling job. And what they bring is that eye on business. Business is to make profit. It's not to follow a trend. It's not to do something and be recognized in that space. It's to make sure you do something that's impactful, not impactful that people hear it and go, wow, but impactful that people will hear it and they'll take out their credit cards and give you money.
Exactly.
And if you're not able to do that, then it's just a game. And that's what's making most of them to fail. And that's the profit also is in working with the traditional banks and identifying key problems, real problems, and trying to solve it. But when you create a fintech from a traditional bank and you have not dealt with the cultural disparity between those two organizations, what you're going to find is that it's going to fail because you want to do some things that requires a certain level of boldness that they will say, no, we can't do that. No, that's not how we do things here. I'm not signing that up, and so on. Yeah.
Do you think fintechs are now poised to solve the huge spiraling costs in traditional banks? Or do you think the challenger banks will eventually take over?
I always resort to collaboration because there is that challenge of capacity, because all these things, they need money. They need money. And for example, if I have a £2 billion deal, I'm not going to go to a Monzo, for example, not because they can't do it, but because I want a solid bank just to protect that deal, to make sure that, I'm not putting anything. Even if you trust Sterling or Monzo or Atom Bank or one of those banks to do business with them, you still have a board of directors of your organization who you're going to tell that you're going to put in that amount of money in this type of organization, and they'll say, hell no, we're going to HSBC and we're going to get this thing done to protect our interests and so on. But if you look at it from the point of collaboration, because there's a massive, technical challenge with the big banks now. Running the mainframes, they are very, 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 very expensive. But the challenger banks don't have to carry that because they're all on the cloud and so on. But the cloud service also carries its own issues, because if something goes wrong, they are managing multiple organizations, then something can go wrong and so on. So I don't see either of them taking over. I just see them growing, providing more and more services into the traditional banks, and traditional banks providing that backbone to enable them to do transactions, to enable them to maybe hit certain milestones that they can't because they don't punch as heavy as the traditional banks. That's what I see there, but you never know. Things can change. I think that's the last question. If you want to reach out, my email address, I think it's on the next slide before we get the pizza. It's just Chiedozie@chinamedia.com. Yeah, and I'll be keen to answer the questions or talk about opportunities and so on and so forth. But thank you so much, guys, for having me.
Let's give it a round.
Thank you.
I would like to say thank you to our guest speaker, Chiedozie Heads, for his wonderful presentation, to our FinTech committee members for your support and your attendance, and to you, our members and potential members, I won't say non-members, for attending this event as well.